The topic of today's webinar is USDA financing for single-family residents, or what they call the Guaranteed Loan Program. But in my classic style, I'm going to kind of start on with a little story and jump around a little bit at the beginning, and then we'll get into the meat of the agenda. And one of the things I was thinking about last night, actually it was a couple days ago, and maybe this has happened to you before, but my wife and I and our kids and actually her brother, we went to a restaurant near our house. We live in Petaluma in southern Sonoma County, and we went to a local restaurant that we just love. We've gone there over and over and over for years. It actually opened, I think, in 2006 or 2007. And we left the other day, and I said to my wife, I said, I don't know why we go there anymore. It's just horrible. It's never as good as it was before. I don't know if you've ever had that experience where you've gone to a restaurant. I remember the first time we went there, it was just my wife and I, and of course it was before we had kids. Maybe that was part of the issue. But you know, I still remember what I had. I had the French dip sandwich, and can't remember what Kim had, but ever since then, we've been trying to get back to that initial experience. And I was thinking about this last night driving home, and we're always trying to recreate the past when something really went well. And I have to keep reminding myself in real estate that it's like that restaurant story. It's like dining out and trying to recreate the first time that you went somewhere that was just perfect. That in real estate and mortgages, we have to constantly look forward to new challenges and new experiences. And the moment we start trying to recreate what worked well in the past, well, we're setting ourselves up for disappointment. So I know everyone has had that same restaurant experience, and what I would encourage you to do is think about your real estate career and where you're at and where you're going, and say, well, the past is the past, whether things worked or didn't work, or if you're in the middle of a transaction that's going sideways, stop comparing that to the one that went perfectly. So every transaction, every file, every purchase, every sale is a new day, a new challenge, and I'm constantly reminding our team and myself of that. So in any case, I always like to start off with something that's totally unrelated, so there you go. So who am I? My name is Lauren Winsler. I'm the branch manager for Frost Mortgage in Sonoma County in Santa Rosa, and we're a boutique mortgage lender serving all of California, and we're a division of primary residential, which serves the entire country. But that's not what we're here to talk about today, so we'll jump on from that. We're actually here to talk about 100% financing and USDA, and give you a bit of a 101 orientation to USDA, an introduction, an update. We'll talk about the program, what the benefits are to real estate agents, how to use it. We'll answer any questions that come in. I see a couple things coming into the chat box right now, and if you can pop in and say where you're coming in from. This email invite went out to counties from Mendocino north and then south of Sacramento. So if you can throw in the chat box where you're popping in from, we'd love to see where everybody's from. So all we've got is name and email. So, but I appreciate that. So any questions that come up throughout that, throw them in there. If it makes sense to stop at that point and answer it, we'll certainly jump on it. Otherwise, at the very end, we'll kind of cover a bunch of different scenarios and questions. So moving on. So when you think of loans with low or no mortgage insurance, you typically think of a 20% down conventional loan. You might think of a 10% down loan with PMI. You're thinking 740 credit, 800 credit score. You're thinking no past bankruptcies or credit issues. you're thinking lots of money in the bank and you're thinking high income and low ratios. Well, that is not recognizing the uniqueness and the tool that we have, the USDA 100% loan program that's sponsored through rural development. Basically, this is a loan program that the U.S. Department of Agriculture created to encourage banks to lend in rural areas. And the definition of rural has kind of changed over the years, but it's anything sort of out off of the major highways and anything that's over, outside of the major population centers. So generally, towns that are over 30,000 in population won't qualify. But we'll come into that a little bit more and how to determine that. But it's a really great program. There's no need to increase the contract price to have the seller pay closing costs. You can have the seller credit closing costs. You can actually finance closing costs to the loan over and above the contract price. You've got low monthly mortgage insurance, or in this program we call it a guarantee fee. We'll get into that a little bit. And it's got maximum loan amounts that are 100% of the appraised value, and there's only a one-time guarantee fee of 2% that's added to the loan. So if the property will appraise for the purchase price or higher, we can actually finance closing costs. There's no cash contribution. In other words, our buyer has to come in with no money, and I'll give you an example later on of how well this can work out. And it has no cash reserves requirements. In other words, someone that has a good job, has decent credit or good enough credit, and has the job history that we're looking and qualifies income-wise, can purchase and literally have no money in the bank to pay the next mortgage payment until they get paid, is the way to think of cash reserves. So it's really designed to be a tool to facilitate and allow buyers that would normally not be able to purchase a home to purchase. Right now, most lenders you'll see have a minimum credit score of 640 to purchase with USDA. So continuing on. So what kind of benefits can we expect for a real estate agent or realtor? Well, you can have more buyers without the down payment requirements. So if you're in an area that accepts USDA financing as far as the property eligibility, we can go out and find people that have good, stable income but haven't been able to save for down payment. And we can use this tool to put them into a house. Low FICO, higher price points, because typically we're going to have a better payment to the buyer as compared to FHA. That's not always true, because sometimes FHA can vary, but typically a 3.5% down payment with FHA. The rates are the same, but the guarantee fee is lower. We can have up to 6% interested party contributions, so we can have the seller, the lender, and the real estate agents contribute to pay the buyer's closing costs. And as I mentioned, what happens if the seller won't contribute, which is something that we didn't used to see 2-3 years ago, but we're seeing on a lot of deals now, almost all of them, but not all of them, but most of them. We can have those closing costs and prepaids, the prepaid taxes and insurance, rolled into the mortgage. So one of the questions that always comes up is, well, is there money? USDA got a bad rap as a loan program because a couple years ago, I think it was in 2010, maybe it was 2009, around May, the USDA available funding ran out. And basically one thing to understand about USDA financing is that the funding for the program, it rolls over fiscally on the fiscal year. So the federal budget, if you will, ends at the end of September, which is timely here since we've just started September. Currently in 2013, there is plenty of funds available. There's going to be money left over from this fiscal year, and they typically will reallocate that and roll it over going forward. This particular website will you can pull up notice of funding availability for rural development. There's nothing here specifically about the program right now. But it does get a bad rap because for a couple months a few years ago they were issuing conditional commitments for the future closing. But that hasn't happened, and the program is fully funded. So the way to circumvent that issue is just, working with the loan officer to make sure that that the funding availability for the buyer is well understood. So the other update issue or question to discuss is the areas update, and I'm going to kind of jump back to the web browser in discussing this, but barring any congressional action, the lending areas are set to change October 1st of this year to sync up with the 2010 census. So I mentioned earlier that the lending areas are based on population density. Those areas have not changed since 2000, and the census has been kind of punted out, pushed out every 6 or 12 months since 2011. When they were threatening to change it in 2011, they pushed it out again till 2012, and then last year they pushed it out till April, and in April they pushed it out till October. So we'll see what happens in the next couple of weeks. So stay tuned. We'll know exactly what's going on. But let me give you an idea of how we would look at that. Let me zoom in here a little bit, but and this is for a different county, but it mentions that barring any changes, that the eligibility is going to change. This is how you look up eligibility, and I'll send these links out with the replay, and I'll drop it in the chat as well. So to check eligibility, you basically look at the property eligibility bullet here on the government website, accept the disclaimer, and you can basically type in different addresses. So if I typed in our current address, our office address, of course it's not eligible property, but let's pretend it was. It's going to show that it is ineligible, but it'll also mark the areas that are as it's thinking here. Think. Okay. There must be something wrong with the site. Let me switch back to the presentation. We'll come back. Okay, it is an ineligible area. And typically, it will mark all the ineligible areas, but there's something slow with the map here. Maybe the GoToWebinar is consuming all the resources. There we go. So it shows that indeed Windsor, just north of us, is eligible, but we're just on the border of what's considered eligible in our area. Well, what's going to happen if you look at the future eligible areas? I'll use our physical address again because they've already loaded the database up. Sorry to make you watch me type. And it's going to say that it's ineligible, but when it updates that map, it should block out a good portion of Windsor or all of Windsor. So by discussing this, we've time-stamped this particular webinar and replay, but that's okay because this is important just to understand. So there we go. So you can see that parts of Windsor may be eligible, but we don't always trust this this demarcation of the map and so forth. But so that's how the eligibility works. Let me switch back to PowerPoint. So you can actually go to that after the presentation and type in your areas and see if what nearby is eligible or not. You may already have an idea of that. So here's a screenshot from before of where it is, and then of course the future. So Moving on, so first-time home buyers, a lot of people have a misconception that USDA is only for first-time home buyers, and that is actually not the case. USDA can be used for people that don't qualify under the definition of a first-time home buyer. Traditionally, a first-time home buyer is defined as someone that has basically no primary residence or no property ownership in the last 3 years. Basically, USDA requires they don't own other real estate. So they can't have a rental property. They can't have a second home, obviously. And if they have other real estate, then they're not going to be eligible. What that means is that someone can sell their residence and then purchase a new residence using USDA as long as they qualify for everything else. So here's the specifics. The current monthly guarantee fee, if you will, or mortgage insurance premium is 0.4% or 0.4%. Compare that to FHA, that's 1.2, 1.25. So it's a considerable savings. The interest rates are the same. They're both securitized into Ginnie Mae mortgage-backed securities, so they're both the same interest rates that you'll get on FHA and USDA. There's a 2% guarantee fee, so if you bought a $100,000 house, your loan would be a little over $102,000 when it was all said and done. There's no reserve requirements, and we can get manual underwriting approvals. One of the things that people that are looking to do USDA, they say, okay, I don't have any money for closing costs or down payment, so they start searching to combine down payment assistance programs, which works in theory. We need a very patient seller to do it, though, but in theory we can combine the CalHFA CHDAP program, which provides 3% for closing costs or down payment, or the grant program with the CHF Platinum program. It's in theory the CHDAP program would work a little bit better. We've not had this combination work, not for lack of trying, but we really need a patient seller because of the overlapping approvals. So, and just want to check, see something. I want to make sure everyone can hear me as far as audio. The audio, if you've ever been on these webinars, I want to make sure that the audio is still coming through clear. So somebody give me a yes, I can hear you. I got some indication that that was not the case, or that there was some static. Okay, moving on. So this is the URL that we dropped in the chat, the property eligibility. So I'm going to skip past that, and we will move on to property type. So what kind of property can you buy using USDA? Well, you can buy a single-family residence. You can buy a PUD or planned urban development. You can buy condominiums if they're listed on the FHA approval list. You can only buy for owner-occupied, obviously. You cannot buy a 2-unit property, so something that has a duplex, triplex, or more. You can't buy a property that has a single-family residence with a accessory unit or a granny unit. The way to think of it is that there can be no rental capabilities in the property. So if the property looks like it would be great for renting, like a side unit, or if it has separate entrance, separate kitchenette, it's likely going to be ruled as ineligible for USDA financing. So no granny units. I'll come back to that as well. There's an acreage rule. One of the things that's really non-intuitive about USDA financing is with this particular loan program, they don't really like to finance properties with a lot of acreage. And you'd say, well, that doesn't make a whole lot of sense. A lot of lenders will say over 5 acres doesn't work. So if you're in a county where they parcel everything into 40 acres at a go, it's challenging. Basically, what they're looking at is saying that the purpose of this loan program is to buy a house, not to buy property to farm, not to buy property for timber value or whatever. So the site value can't really exceed 20% of the appraised value. So the value needs to be in the property itself. So when we get heavy on acreage, it doesn't mean that we can't go over 5, but that's kind of a rule to use. If the property looks like it could be, you know, rented for ranching or something like that, or that we see all sorts of combinations. But in the past, USDA has not liked swimming pools. You can get an exception for that. Basically, if it has an in-ground swimming pool, they're not as fond of it as, you know, no particular explanation as to why that is the case, but that's been in their rule book, if you will, for a while. So an above-ground pool is no big deal, but an in-ground pool. But there are abilities to get exceptions from the local offices. Difficult property types: manufactured home, single wide, double wide. If it's ever had wheels under it, it's going to be harder to finance with any loan, but specifically with USDA. There are ways to finance USDA for manufactured homes, but the marketability of those loans is challenging. So USDA permits it, but it's hard to find lenders that will do it. So if you're faced with that type of property or purchase, we can look for a solution. Properties with any commercial use. So here's another non-intuitive thing about USDA is in a rural area, somebody might say, well, my buyer wants horses, or they have horses. I've run into this on more than one occasion, where if you're buying a house that has a couple small horse stables or a barn or something like that, it's going to be ineligible for USDA. Okay, even a property that had dog kennels, let's say it had half a dozen or a dozen dog kennels, right? It's going to be ineligible for USDA because it's going to violate that commercial use guideline, where they don't want the person buying it for commercial. It's entirely residential in use. So horse stables, dog kennels, garages for working on cars, running a home-based business, and so forth. Moving on. So income limits. USDA it does have income limitations. In other words, our buyer cannot make too much. It's based on the median income limits for the county. And before you say, "Oh darn, that's going to make it," that's going to make it work only for low-income people. They are very generous in the income limits, and they're based on household occupancy. So one of the things that you have to be very careful of when you're working on USDA with a buyer is that the loan officer, the lender, is fully understood and underwritten the income limitations. So if I buy a house, and let's say grandma is going to come live with us, but grandma gets Social Security, we have to factor in the other occupants into that income limits. Now there are some complications to that make it easy to kind of move around if we're right on the edge, but it's one thing that we want to look at very specifically. So based on the entire family size that's going to occupy the house. So, but there are some other rules and so forth that fit into that. So I was going to jump off here really quick and show the income eligibility, just to give you an idea. And I'm going to use Sonoma County again, unless somebody pipes up in the chat box saying check my county. But actually, let's check Mendocino here. I know we've got Mendocino on here. Whoops, not Madera, please. Okay, although we could do that. So let's say Mendocino. Let's say it's 2 people living in the house, and we'll leave the age or disabled things alone, and we'll just go for the generic type scenario. Well, let's just type in a number and say that we have a wage earner makes $60,000 a year, and that the other one stays at home, and there's no other specifics. So, and I don't want you doing this stuff. This is what we do all the time, but we're going to zoom in on the Section 502 Guaranteed Loan Program. So in Mendocino County, for 2-occupant household, if they make less than $74,750, they qualify. and which is quite generous. We can change this around, and let's change counties just to show you. So another one here. Let's try. I think Humboldt's the same or similar, and these do change based on, and they go up a little bit basically. We change to Sonoma. We'll give it 2. If I put in 5, it's going to be a lot higher, for instance. And I'll just put a number in here just to trick it. And it's telling me that 93,450. So 93,450. Let's remember that number because I think I have this screenshot at one point on a slide later in the presentation. But so depending on the median income in the county for that particular year or trailing year, they're going to set the income limits based on that. So there's a little italics bullet here, no asset limit, but in other words, they can have money in the bank, but the rural housing doesn't really like buyers that have enough to do a 20% down payment to do this loan program. So it's not a written rule, but it's kind of a rule of thumb. If somebody has a 20% down payment, they're not going to qualify. Oh, here we go. So 92,450. So we see that it actually went up $1,000 since I revised this presentation a year or so ago. So a couple process notes. USDA has this what they call a conditional commitment. So when you have a buyer that's buying with USDA, they get pre-approved, they submit their offer, they get accepted, they go and appraise. It's just like any traditional loan program. They get their house appraised, they go to underwriting, they get it approved. Once the underwriter at the lender has approved the loan, they send it to one of the local area offices or field offices to provide the conditional commitment. What that means is that USDA is saying we will insure or guarantee this loan because it meets the income limits. Now they don't re-underwrite the whole loan. They basically put that burden on the lender, but they do look at the property eligibility and they do look at the income limits to make sure that it's meeting the eligibility before they give it the conditional commitment. Right now it's taken about 2 to 3 days. I think the last one took 3 days. When it's really busy and backed up and so forth, it could add as much as 10 to 14 days, 5 to 7 business days. They've actually automated or accelerated this in the last 18 months or so, where all the files are submitted electronically, which has saved a lot of that time that we saw years ago, where essentially a paper file is stacked and sent to the field office. So because of the electronic, it's taking less time. I kind of like to say, well, it's possible to close the USDA in 30 days. It's better if we have 45 days, and that's not specific to any lender. That's just a good rule of thumb. But keep that in mind with respect to escrow close dates, that there is this process at the end that can add a few days before docs can be drawn. So, so how to market USDA? My favorite is we used to do these these letters, or we used to call it "move in for a penny." So essentially mailing out letters with a penny in there. It's a good segue to a story. I was going to pull some screenshots from a closing statement, but one of the best scenarios that we had some buyers attend a local home buying seminar that we did, and this was, I think, 18 months or 2 years ago, but it's the one that sticks out in my mind the most. They bought a $220,000 or $230,000 house, single-family residence. It's a 2 or 3 bedroom house, and of course, I think they had enough to maybe do down payment assistance with FHA. But we were able to get them a lender credit. There may have been some seller credit, but they basically, at the beginning of the contract, wrote a $1,000 check for their earnest money. And at the close of escrow, hold on to your seat, they received a check from escrow for not quite $999 moving for a penny, but they received a check for $960. They weren't expecting any money back. They were actually expecting to come in with more money for additional closing costs, but they could not believe it that they essentially purchased a home for $40 with their first payment due in about a month and a half. So it really is possible to make it work with USDA. That's the one that sticks out in my head. A lot of times with USDA there will be no earnest money deposit, which is often the most difficult thing to sell to the seller. So if you can get an earnest money deposit on there, they can get it back. But the earnest money gives some skin in the game to the seller that gets them over the fear that the buyer has no commitment to the transaction. So anyway, back up to the top. Get the word out to your past clients. I would be looking at all the people I've talked to in the last 3, 6, 9 months and see if there's any potential buyers to use this loan program. I think including this as, you know, did you know, maybe you have a friend or maybe you have a colleague or something that could buy with USDA, you know, put that out to past clients, put it out to potential buyers, you know, to generate referrals. You know, I mentioned going through past leads. That's something that we kind of look through every once in a while, cull through all the stuff that slipped through the cracks. Maybe they were pre-approved as FHA or FHA buyers and it didn't work for whatever reason, they pulled away. We'll go back and look at them and say, hey, have you thought about USDA financing? We always talk about USDA in seminars, so if you do a local seminar, it's a great topic to have a lender come in and talk about, or even just throw a did you know slide up there. So lead magnet, you know, if you're internet savvy, throw some opt-in pages up that pull in people that are that are interested in 100% financing. There are a couple categories where even though there aren't a lot of foreclosures on the market anymore as compared to a few years ago, there's a couple categories that are really good for collecting leads online. One of them is free foreclosure listings. I don't know if you knew that. 100% financing is another great one. You know, people will contact you to get information about that 100% financing, and a lot of people don't know about this loan program. You know, offer a short free report. You know, local SEO, if you don't know what SEO stands for, search engine optimization, including information about USDA and your local listing on Google, so that when people type homes for sale in your county or your town or community, when they click on that profile, they see references to 100% financing, and when they're comparing who to call, if they see that, they might call you. Putting up locally optimized YouTube videos that have your town or county in them that reference USDA as being a resource, a realtor that understands how to use this financing. All great ways to get your phone to ring or get people to email you. So anyway, we're nearing the end of our initial time. Let me jump out of here. Oops. Jump out of here. We're actually going to jump into a Q&A, so I mentioned this would be about a 30-minute presentation, so we're keeping to that promise. So if you have any questions that specifically, type them into the chat box here. I'm not going to put you on the spot and enable your audio, but please do you know, type in what your questions might be. Yes, there is a replay available, and I'll make these slides available as well. And as we learn more information about any changes to property eligibility, I'll shoot out an email to the group that attended this webinar as well. But one of the questions that I wanted to cover that I mentioned in the email and in the go-to webinar sign-up page was, I'm a listing agent, and what do I need to be careful of for USDA eligibility? Okay, so we mentioned a few things, right? So imagine, you know, you're listing the property You're representing the selling side. You know that the property is eligible. Well, that's the first thing is, number one, check, is it eligible, right? You may know that it's ineligible because it's in town, or it's eligible because it's out of town, but double check the eligibility. Maybe put a screenshot out there, put that screenshot printed out on a color printer, and put a few copies at your broker open, put a few copies at the open house, just letting people know that it is eligible. If anyone has, we've got some flyers on USDA financing as well that are lender neutral, that if anyone has interest, we can include those with the replay link. You know, does it have any commercial use? Does it have is it 2 units? Does it have granny units or rental capabilities? Does it have outbuildings or accessory buildings? Is it got what looks like a hobby farm on it, I'll call it? So if it has grapes or vineyard on the property, it's probably not going to be cheap enough to buy. But if it had a large-ish type of you know, I'll call it hobby garden, if you will, or you know, sometimes we run into an orchard grove or something like that, a bunch of walnut trees and so forth. It gets on the border of whether that be considered farming or commercial use. So what I would jump back to that we didn't talk too much about is just the condition of the property. So when a lender that's doing a loan on USDA, when they send out the appraiser they use is, it's not like VA where they have a VA roster appraisers. It is a FHA appraiser. It's an FHA approved appraiser. So it's the same community of appraisers that are doing the appraisals for FHA that are appraising for USDA. So they use the same HUD guidelines for property eligibility and the condition of the property. So if the property has dry rot, if the property has obvious roof damage, we're looking at what they call health and safety issues. So if the property is FHA eligible, it will be USDA eligible as well. If it is got some issues that present health and safety issues, like loose deck boards or broken windows or massively cracked concrete, you know, all sorts of things that can cause issues. An older home built before 78 with lead paint or peeling lead paint is going to be an issue. So I wouldn't, you know, tear your eyes out trying to figure out whether the property is going to qualify or not. But if the property has a lot of deferred maintenance, it may require some repairs. In other words, the property may be appraised as subject to repairs, or it may be appraised as is, with the appraiser noting certain things about the condition of the property as not meeting what they call the minimum property requirements or health and safety rules. So one that we see a lot is uncovered electrical, or even electrical sockets where those little face plates have been torn off by the person that moved out. You know, in California in the last 2 years, the CO detectors. A lot of appraisers cite the California law saying that we need a carbon monoxide detector on both levels of the property, if it's 2 floors or on the main level, just like a smoke detector. So those are the things that we'll see in the appraisal that we would want to be careful of. But if it's got a ton of deferred maintenance, or it's got a lot of work that needs to be done, you know, it may be a conventional, a cash type purchase. But it's not something that that I would discourage people from looking at USDA financing. A lot of times with our buyers, we'll look at the listings and look at a lot of pictures to see if we think it's going to be an issue for FHA or USDA. So on the listing and the buyer side, we got to, you know, look at it. And sometimes we'll think, oh, that might be an issue, and then it doesn't come up. So in 2006, or was it 2008? I'm losing my mind now. I think it was 2008. FHA and HUD changed the rules for property eligibility, and they basically said the appraisals are going to be as is, except for the minimum property requirements and health and safety. So it's a lot easier in the last 5 years as far as the property condition. They're not nitpicking over, oh, there's some, a chipped board here or there. One of the questions that's come up here that is a good segue as well, and I'll jump to the next slide, and actually the intent was to type in these questions. So what about pest reports? And that is a great question. So if the property has obvious pest damage that the appraiser will note, or that the appraisal will take pictures of and not specifically note, but the underwriter can identify that as dry rot, then the underwriter might condition for a pest inspection. There is a form in California that we use that works with all our USDA field offices that has 2 boxes on it, and I'll segue here and add septic as well. But basically, we ask the appraiser on this one form to check yay or nay, does the property meet the FHA or HUD rather minimum property requirements, and then does it need a septic inspection or does it need a pest inspection? So if the appraiser checks no on the pest, then we don't need a pest inspection. Now, I always encourage my buyers to get a pest report regardless of whether they want to make that pest report subject to underwriting. But there's nothing in the USDA program that requires a pest inspection. It is based on the appraiser's opinion. So if the appraiser says, yeah, I think there's some problems here, but I'm not qualified to inspect that, then they can check yes on that form or put verbiage in the appraisal that would cause a pest report to be needed and a pest report to be needed in underwriting. Similar on that form is the septic inspection. So traditionally on a previously owned property, I'm always insisting that my buyers get a septic inspection. If anything, just to check it. Now, as you know, we can't typically know if the septic is fully functional unless they pump it, and depending on the type of septic system and so forth. So that can be quite expensive to fully service it. It might be $700 or $800 depending on where you're at and what type of system it is. And you're essentially servicing a property that you don't own yet, which is always kind of an interesting thing. But pumping the septic tank when you don't own the property. But the inspectors will always tell you on an inspection that you can't tell if it's working unless you pump it. But so if we're confident, we'll often give the green light for that, to go ahead and do that. But the septic inspection is not required if the appraiser checks the right box on that form. So they can do a cursory inspection and say, it looks okay, the toilet's flush, and so forth. So, the utilities and the electricity need to be on at the time of inspection, and so on. So, if they do waive the pest, and if they do waive the septic specifically, they have to sign a notarized hold harmless at closing. But we typically recommend not trying to jump around and say, let's not do a septic inspection. Think about what makes sense for our client too. If they're buying a house and they have no money to put down, or very little money over and above their retirement savings to put down to buy this house, should we put them in a house that needs $5,000 worth of septic work right out of the gate? And the answer is almost always no, unless there's a plan to solve that after closing. So I understand that issue. So anyway, I'm going on and on about this. I apologize. So any other questions in there? Sarah, I don't know if you see any questions. We can't hear Sarah, but I can see her dropping stuff in the chat. One of the other questions, whoops. So no questions. So I'm going to end it here if there's no other questions, because we've gone a little bit longer than the time that, unless somebody else has something. So let me skip past that. Let me put my contact information up here. But you can reach me at lauren@frostnorthbay.com. I'm going to send out all the slides and a link to the replay on YouTube. What I'll say is watch for webinar announcements. We traditionally, if you sign into one of these webinars, we'll traditionally include you on future announcements about loan programs or technologies or whatever. If you don't want those, just click unsubscribe or respond and click unsubscribe. You can also subscribe on the replay page. So if you're watching this on a replay and you say, well, hey, that was pretty cool, look around, look below on YouTube and jump back to the replay page, and you can opt into the email list to get notifications about these in the future. So oops, got one question there. So see who hands it. So we've got a question. Somebody hit raised hand. So Jamie, do you have a question? Because I don't see it in the Q&A box. Let me double check here. Or did we just hit raised hand? Send a quick chat message here. But I don't see, we're not going to unmute anyone because that's often resulted in disaster. So if you have a quick question, type it in there, and I or Sarah or I will come back to it. So I do see a lot of times people will click the raise hand button by accident. So, but if you have a question, please put a note in there. So in any case, what I have to offer you today, though, is I like to chat with people on the phone and kind of mastermind or brainstorm. So if you have any interest in getting on the phone with me and just discussing your business, what you do with respect to lead generation, business building, brainstorm, we can talk specifically about USDA. We can talk about local SEO. We can talk about how to put something on YouTube to market USDA. So if you're interested in doing that, this is the ultimate soft sell. I'd love to get on with you on the phone. We could get on GoToMeeting, kind of just discuss where you're at in your business. Doesn't matter whether you've been in real estate for 28 years, 5 years, 5 days, 5 months. So if you're interested in that, just say yes or count me in the chat window, and we'll make a note of it, and I'll shoot you an email afterwards, and we can set up a time just to chat for 20 or 30 minutes on the phone, and maybe just do some brainstorming on how you can use USDA in your business, and what you're up to with respect to lead generation. Share some of the things that we do as well. So anyway, that's the gist of our presentation, and I appreciate those of you that have hung on till the end. I really do. So I wish you good luck today, and make it a great day. Thank you very much.